안녕하세요. 한국경제신문 뉴욕 특파원 박신영입니다. 오늘은 누리엘 루비니 뉴욕 스턴대 교수님을 모시고 미국 및 글로벌 경제와 관련한 인터뷰를 진행합니다. 루비니 교수는 2008년 금융위기를 예측한 사람으로도 유명합니다. 닥터 둠이라는 별명도 그의 이름만큼이나 잘 알려져 있습니다. 관세와 이민 제한 등 트럼프 2기 정부의 정책으로 인한 경제 불확실성이 커진 가운데 루비니 교수가 현재의 경제 상황을 어떻게 진단하고 있는지 들어보겠습니다. In your book, you mentioned the deglobalization and US-China tensions, and which appear to have become a reality, I think, these days. So, for example, Trump's tariffs have targeted not only China, but also countries like Mexico, Canada, and Denmark. Do you think these policies benefit the US economy, despite the diplomatic challenges they create?
Well, I would say it's a conventional wisdom among economists. And I agree that tariffs, especially excessive tariffs, are bad. They cause higher inflation, they reduce economic growth, they lead to a less efficient allocation of production from low-cost areas to higher-cost area. And I think that, of course, there is a threat that these tariffs by the Trump are going to be implemented. He went as far as saying they could impose up to 60% tariffs on China and up to 20% on the rest of the world. Now, some people are slightly more optimistic, and they believe that the way it was described, he wants to escalate as a way to de-escalate, meaning that he usually always makes demands that are very extreme. Then he sits down, he negotiates, and if he gets something in return, and many of the trading partners of the US can do things that are related to trade or to defense spending or importing more US goods. Of course, in the case of Mexico and Canada, migration issues, fentanyl issues, and other issues are also important. So there is some hope that the amount of tariffs are going to be moderate, targeted, limited, because otherwise the economic damage to the US will imply higher inflation and lower economic growth. But there's also the risk that within his advisors, there are some that are more hawkish on trade. They really believe in tariffs. And there are those who are more pragmatic. And we do not know yet whether the more hawkish or the more pragmatic advisors are going to have the upper hand. And at the end of the day, probably it'll be the instincts of the presidents are going to be determining what happens.
So at the recent American Economic Association meeting, I've been there, many economists expressed concerns that Trump tariff could lead to inflation, but while others argued the impact might not be significant. So there is still debate between it can cause inflation or not. So, and you think it can cause inflation? There is possibility.
Yes, usually what happens is that when you impose a tariff, import prices go up, sometimes as much as the amount of the tariff. That directly increases inflation on imported goods or imported inputs in production. And then when the price of imports go higher, sometimes the domestic producers of similar goods may be tempted also to increase their own prices. And if that happens, then you can have a second round effects on wages increasing and prices increasing even further. Of course, the extent of the impact on inflation depends on the size of this tariff. A 10% tariff has a smaller impact on inflation than a 50% tariff. Second factor that determines how inflationary this tariff is going to be what are the accompanying movements of currencies. of exchange rates. For example, when Trump in his first administration imposed tariffs of up to 20% or so on a range of Chinese goods, what happened was that the Chinese allowed their currency to depreciate by an amount that was close to the amount of those tariffs. Let your currency depreciate, then of course import prices don't go high, and that's one of the reasons why in the 2018-19 episode, the impact on U.S. domestic inflation of those tariffs was modest. So the question is, does the dollar become stronger significantly, and the currencies of the country where the tariffs are being imposed weaker in a way that then reduces the impact on inflation, or whether those currency movements do not occur or occur to a lesser extent. Now, it is true that if the currency appreciates the dollar, the impact on inflation of those tariffs is smaller. But if the objective of the tariff is to reduce the trade deficit of the US, either overall or bilateral, then a movement of the currency prevents the adjustment of the trade balance from occurring. Meaning, when you impose tariffs, you cannot have at the same time no inflation and an improvement of your trade deficit. If you let the currency appreciate, you don't get as much of an inflation impact, but you don't improve your trade balance. Well, if you don't let your currency appreciate, then higher import prices imply lower imports, and then the trade balance improves, but then you get some inflation. So it's not a free lunch. You have to decide what is your objective and trade off those things.
Last year and the year before, there were widespread concerns about potential recession in the US, but yet the economy has remained surprisingly strong. So in your view, what are the key factors behind this resilience? Some have potential to AI, labor flexibility, and a robust business environment as possible explanations. So how do you think about that?
Yeah, in my view, there are many reasons why, in spite of the Fed pushing interest rates from 0 to 5.5 and doing quantitative tightening, we did not get a recession. One of them is the one that you refer to. The AI revolution has led to a boom in capital spending, not only among the big tech firms, but now across a broader range of firms that want to capitalize on AI. That's one of the story. The second part of the story, in my view, is that there were three negative aggregate supply shocks that during COVID reduced growth and increased inflation. One was the initial impact of COVID on the supply of labor, on supply chains, and on production of goods. The second one was the impact of the brutal Russian invasion of Ukraine on energy and commodity prices. And the third one was the continuation of the zero COVID policy of China. Now, those three negative aggregate supply shocks in the last 2 years have reversed. The bottlenecks coming from COVID have gone away, and supply of labor increased, and people can produce goods and services. The impact on commodity prices of the Russia invasion of Ukraine faded away, in part because Europe and others found new source of energy from US, Middle East. And 2 years ago, China eliminated their zero COVID policy. So stuff that had reduced growth and increased inflation reversed and then led to more growth and less inflation. And that helped while central banks were raising rates, because without those positive supply shocks, most likely raising rates so much would have caused any recession. And there was another final factor. While monetary policy in the US became tighter, fiscal policy became looser, not just traditional fiscal policy, but also some major investment plans. You know, the US passed the CHIPS Act that led to significant commitments to produce new semiconductors in the United States. It passed the infrastructure plan with significant amounts of investments into new infrastructure they need. And it also passed what's called the IRA, the Inflation Reduction Act, that gave almost $1 trillion of incentives to invest into green and renewable energy. So those three sources of stimulus have led to a significant increase of production and of capital spending, investment, private and public, in the US economy. So these are all the range of factors on top of the AI story on why we did not get a recession.
Because of those three factors, the US economy can endure these higher interest rates over a prolonged period, right?
Yeah, the supply shock reversed. We had a fiscal stimulus, and we had the AI revolution. And therefore, I would say, if you think about three potential scenarios for the US economy, one is soft landing, where we go back to 2% inflation without recession. A hard landing, that was the story of you need a recession to get to 2%, and then no landing scenario, where growth remains above potential and inflation remains above target. I would say the probability today of a hard landing is very low, maybe 10%. My baseline is a soft landing, but if there is an alternative to soft landing, I think that the no landing is more likely than a hard landing, meaning there are strong forces that are inducing growth. The latest data on growth show that growth for the last 2 years has been well above potential. Inflation has fallen, but now is quite sticky. If anything, by some measure, it might be rising. And certainly some of the policy of Trump's tariffs, draconian restriction to migration, massive fiscal spending that is not financed with tax cuts, and spending is not financed, otherwise can overstimulate demand. If the US were to try to weaken the dollar, if Trump were to try to weaken the independence of the Federal Reserve, all those things would imply more inflation rather than less inflation. So I would say the risk is a bigger risk of no landing, I would say, than a risk of a hard landing compared to a baseline of a soft landing of the economy.
You are known as a Dr. Doom globally, but you are saying very optimistic to US economy. So some people think this is the very surprise. You are saying optimistic about economy.
Well, I always say I'm not Dr. Doom, I'm Dr. Realist. You have to see the upside, you see the downside. I just gave you 4 or 5 reasons why some of the policies, from trade to migration to excessive deficits, to try to weaken the dollar, to try to interfere with the Fed independence, could cause lower growth and higher inflation. But there are also other Trump policy that will have the opposite impact, meaning they will increase growth and reduce inflation. Is overall pro-business. They may increase business confidence and increase investment and economic activity. He wants to make his tax cuts of 17 permanent, lower taxes on capital and labor, everything else equal, can stimulate growth. He wants to deregulate the economy. Probably regulation will become excessive. That could be positive for growth. He wants to increase the production of fossil fuel, leaving aside the impact, of course, on the environment is negative. More production of that may mean cheaper energy prices in the US, lower inflation, and more investment and production in energy-intensive industries. He wants to, with this Department of Government Efficiency, DOGE, try to reduce wasteful government spending. And finally, the US is ahead in many of the technologies of the future. They're not just AI, machine learning, robotic, and automation, but a spectrum of other ones. The fact that the US is ahead and the economic policies are pro-business, and many of the tech leaders, not just Elon Musk, but many of them are going to want to support economic policy of the administration that may be pro-technological innovation. These are six forces that actually can increase growth and reduce inflation. So the net is going to depend on how much Trump is going to follow the positive policies as opposed to the negative ones, and what would be the constraints on not following bad policies. So there is some good, there is some bad, and there is a lot of uncertainty. I think that only after the inauguration, the first few months of the administration, we're going to know whether they're going to go in the more positive direction of better policy or in the direction of the more negative. And I think it's going to be most likely a little bit of a mixed bag. A mixed bag means then if some forces lead to higher growth and other lead to lower growth, it'll be a wash. US this year may be growing 2.8%, well above the estimates of 1.8 of potential. So next year, in my view, growth will be lower than this year, but it'll be still above potential. If potential is 1.8, and this year we're at 2.8, maybe we get 2.3, 2.4. That is still good, not as good as this year, but is above potential. That's assuming that on net, the policies that increase growth, a wash compared to the policies that reduce growth. On inflation, I'm a little more concerned. I see that the policies that may lead to lower inflation take a long time, many years. Deregulation or producing so much more energy becomes cheaper. They take 3-4 years, while the policies from migration, tariff, protectionism, excessive deficits that increase inflation may have more of a short-term impact. And therefore, I fear that inflation is going to remain stuck above the target of 2%, maybe core inflation 2.5, 2.6, as opposed to falling further towards 2. So the net impact on growth next year, is a wash, lower than this year growth. The impact on inflation might be inflation being more sticky for longer, implying that the Federal Reserve may then have to cut less or in some scenarios stop cutting rates. And if inflation were to really go higher, if you have a lot of tariffs, the Fed may even increase interest rates this year rather than reduce them.
Chairman Powell has emphasized the strength of the U.S. economy last month. Yet the Fed's decision to lower rates during the December FOMC, as you know. But that meeting has been criticized by some as contradictory. How do you interpret this situation and evaluate the Fed's current monetary policy?
You're pointing out correctly that there may be some contradictions or conflicts or complications in the job of Powell and the Fed. On one side, in December, the cut rates, and in the past year, 24, cumulatively, the cut rates by 100 basis points since September, but from a very high level. So monetary policy was restrictive, and inflation, you have to give them credit, was falling below 3%. From 9% in 2022. So some easing was maybe necessary, but the point is not going to be on 24, but the year ahead. The main important point about the December meeting was not the decision to cut rates another 25 basis points, but the revision of the forecast. Before December, the Fed said we're going to cut rates 4 more times in 25 basis points each time, so another 100 basis points. While at the December meeting, they're only forecasts, but they give you a signal of likely policies that this year, 25, the rate cut may be only 2 of them. And there are 2 factors that are going to be affecting Fed decision. One is that even before Trump was elected, the economy, as I pointed out, looked like in a no landing zone rather than a soft landing. Growth is still strong, inflation is still sticky. And on top of it, if the policies of Trump on one side are overstimulative and they are inflationary through large budget deficits, tariff, protectionism, migration, currency, Fed, you name it, then inflation could remain sticky or go higher. And it's possible that the Fed may not even cut 2 times. They may cut only once. They may cut 0. If inflation were to go higher, you cannot even rule out, it's a tail scenario, that this year the Fed may increase rates rather than reducing them. It's a tail scenario, it's not the baseline. But suppose you have really very, very high tariffs, extreme ones, and inflation goes higher, the Fed may have to raise rates.
The US stock market was impacted by the FOMC. But for instance, S&P 500 is still around 6,000. Do you think, is there a bubble, or US stock market represent US strong economy well? How do you think about that?
Well, it's a combination of both. I think that economic growth has been strong. Profit and earnings growth has been strong. This AI revolution may lead to an increase in potential growth. Potential growth was estimated until recently at only 1.8%. A number of economists looking at the recent productivity number say that you cannot rule out that as you implement these technologies across the business sector, by the end of this decade, US potential growth could be as high as 3%. The fact that we have had growth of the last 2 years of 2.5, 2.8%, with inflation falling, may be already a signal that these positive aggregate supply shocks from technology are increasing productivity, growth, and profits. So that's the positive story. Of course, price to earning ratios are high by any historical measure. Expectation on what earnings and profit growth for next year are still overall double digits. Some of the increase in the stock market has been driven more by the, Max 7 and so on. But even other stocks eventually rallied during the past year. I would not call it a bubble, but I would say that can be reasons for correction. And the biggest reason for correction might be that if the policies of Trump lead to higher inflation, then long-term bond yields may go even higher. The 10-year Treasury yield that used to be a few months ago 3.8% is now closer to 4.7%. And people think also about maybe closer to 5 or above. If bond yields were to be further higher, stock prices will have to correct because people compare returns on bonds with those of equities. And in the last few weeks, the stock market after the post-electoral rally has been a little bit more wobbly. The Christmas, what they call Santa Claus rally did not occur. And in recent days, when bond yields go higher, stock prices tend to fall. So a scenario of a correction is one in which if Trump comes to power and then he says lots of tariffs, lots of draconian restriction to migration, and I'm going to deport millions of people, and 3, I'm going to make my tax cuts permanent and do more tax cuts, and I'm not going to find ways to pay for it, then I think that the bond yields will go higher. 1, because expected inflation is higher, and 2, if you have deficits that are over time less sustainable, then investors are going to require higher yields, higher real yields, higher risk premium on those bonds. So if bond yields were to continue to go higher and get to 5% or above, and we're only 30 basis points away from that, then a real equity market correction could start. That certainly it's a scenario that at this point you cannot rule out.
How about U.S. federal government deficit? Because deficit can lead the 10-year bond yield to move up. Some people, that is the most and the biggest risk in the bond market. Is there any possibility, for instance, Moody's can U.S. government credit down.
Your concerns that excessive deficits may lead to higher bond yields are absolutely warranted. Usually, credit rating agencies move very slowly compared to markets. So when something becomes unsustainable, the first things happen is that market prices move. People refer to them to the bond market vigilantes. They wake up and they say the deficit is higher, bond yields go higher. So the adjustment of bond yields occurs well before rating agencies. Usually takes them 6 months, a year or longer to do the downgrade. And that's the market discipline coming from bond market vigilantes is what can be at work. And as I pointed out, 10-year yields have gone from 3.8 to 4.7. It's almost 100 basis increase based on initial expectation that Trump would be elected, and after election expectation that some of his policies are going to lead to higher deficit and so on. So definitely, I think that one of the significant risks is that if you look at what he has promised, one, he has promised is going to make permanent all the tax cuts of 2017 that expired at the end of this year. Second, he made lots of other promises. No taxes on tips, no taxes on overtime, no taxes on social security payment, no taxes on the income of US citizens who are residing abroad, and so on and so on. Independent think tank, the Center for Responsible Budget, has estimated that if all of these promises are maintained, on top of the existing deficits, we may have another $8 trillion of additional debt over the next decade. That means $800 billion per year that will push the current budget deficit is close to $2 trillion per year already today to a significantly higher level. So the big question is, will he cut down on some of his promises, whether he has ways to pay for some of the things that he wants to do. Some of it he says, well, I want to make my tax cuts permanent, but I'm going to finance them with tariffs. How much revenue can he get with tariffs? And if he gets a lot of revenue because the tariffs are high, then we'll have an inflation problem, and then rates go higher because inflation is higher, even if he's trying to contain the deficit with having higher tariff taxes. So there is no free lunch. You cannot have it all. There's always a cost, and to reduce the deficit and to keep interest rates from rising further, you have to make tough political decisions, either not to cut taxes as much as you promise, or to find meaningful ways, but those are hard, to reduce government spending. But there is no free lunch, and there is no easy way out of these problems. And he has a very small majority in the House, only a few votes, and therefore anything will be complicated.
I think many people really agree with your opinion about there is no free lunch. I like to go back to the subject about Trump policy. Many people are worried about labor market. I know there is no specific policy, but is there any possibility his restriction about immigration can make a labor market be tightened?
Well, certainly, if he were to do some of the more extreme things he said, along the line that we're going to close the border, we're not going to let anybody in, and on top of it, we're going to essentially deport millions of undocumented workers, then you'll have a significant drop in the supply of labor, and that supply of labor has increased growth in the last few years, and that increase in the supply of labor has led to also inflation to be under control, because with more workers, wage inflation has been more moderate. Now, he could do less. He could just maybe deport maybe violent criminal, but not everybody else. He could have a more rational migration policy that says U.S. needs people in certain sectors. So let's use a model, I don't know, like Australia or other countries where you get points depending on your education, your skills, your human capital, the sectors where we need workers. Some of them may be high tech, but some of them may be low tech. US needs workers in agriculture to pick up fruits during season. So the type of skills needed are a spectrum. So if we had a more rational reform of immigration, where you say we need, a million plus new migrants every year, one, that they are legal, documented, two, that they are the kind of migrants we need, then that will be a positive change that probably everybody, including Democrats, could support. If instead it has mass deportation and closes the border and so on, and the tightness of labor market get worse, we get lower growth, we get higher inflation.
I would like to ask about our Korea's domestic question. In South Korea, I think you know that is currently navigating a political crisis due to impeachment. Considering the country's heavy reliance on international trade, how do you think this political instability might affect its economy?
Well, usually, we know that political instability and uncertainty leads to policy uncertainty, and that may weaken business sentiment or consumer sentiment. It might also make more cautious foreign investors invest in the country. Those are risks, but I think that this latest political crisis has shown that South Korea is a strong democracy, has good institution, good governance, good civil society, rule of law, independent media. I'm sure that whatever will be the details of what's going to happen next is going to remain a very solid democracy, a good friend and ally of the United States and all the rest. So, Korea, like every country, is concerned about things like slowing growth, jobs and opportunity to young people, aging of population, and so on. But I would say that in spite of some risk of deglobalization, we are still in a very globalized economy, and a small open economy is open to trade with the world is going to be benefit, because especially trade in services and digital services will be all sorts of trade related to AI, machine learning, automation, of course, semiconductor, integration of software and hardware. Those things are going to continue, and Korea has the advantage of having a very strong manufacturing base, having an advantage in semiconductors, having also a solid other manufacturing industry like autos that, of course, have to gradually over time change and convert towards electric vehicle, strong business sector, entrepreneurship, and also very good human capital because people study and work hard. I know that there are lots of concerns. I'm actually convinced that in a world where AI and related things, lots of other industries are related, it's not just AI, where technology, knowledge, and innovation are going to be the driver of growth, that Korea is going to remain successful with good institution, good governance, macroeconomic stability, and with further structural reforms that increase innovation and productivity growth. So I would say Korea is better placed than many other countries to navigate, of course, these uncertainties coming from the future.
The biggest risk of the Trump administration is maybe unpredictable. In your opinion, how can we, like Korea, prepare that kind of unpredictable of Trump administration? Is there any certain standard we have to keep?
I think that many of the advisors of Trump have said our threats of tariffs and protectionism is only a way to escalate, to de-escalate. And you have to listen to the kind of things that, Trump worries about. And some of them are some legitimacy. For example, U.S. says friends and allies from NATO or Japan, South Korea, Taiwan, don't spend enough on their own defense. They should do more. So there has to be more burden sharing, or they have to pay more the U.S. for the defense services the U.S. offers. And Korea is moving in that direction. There is a recent agreement. If you spend more on defense, you have to buy more weapons, buy more U.S. weapons. That reduces your trade surplus to the U.S. The U.S. has a lot of natural gas, and with LNG terminals can export it, and you can buy more cheap US LNG and rely less on unstable sources of natural gas like Russia and others. Maybe you can buy more of the agricultural goods of the US. Maybe if some of these currencies, including the won, are too weak, over time, maybe you can have an agreement that if you let your currency appreciate, then the US is not going to impose tariff for smaller ones. Or the US wants to reshore some manufacturing in the US for national security purposes. And guess what? TSMC in Taiwan, Samsung in Korea are willing to start building some factory in US. US wants de-risk the relationship with China, not decouple. Sectors that are sensitive, like technology, if you go along with the US is going to be happy. You know, those and different types of dimension on which you can have a dialogue. If the US threatens tariff, don't respond by saying, if you impose a tariff, I'm going to impose a tariff on you. He's going to react by becoming even more aggressive, because he's going to say, you need our defense and you're running a trade surplus. No, say, let's sit down. We're good friends. We're good allies. And maintaining friendship with South Korea is going to be a key way of making sure that Asia is not taken over by Chinese hegemony. So let's sit down, have a dialogue, and let's figure out what needs to be done. And usually when you give them a few carrots and bones, Trump declares victory, say, hey, you see, I got all these concession, great deal, the best deal ever. He declares victory, he moves on, and maybe what you have to give in is moderate. I think a pragmatic approach to relationship and a constructive approach to relationship can maintain the friendship and the alliance that the US has with South Korea. All others, friends and allies, can do the same. But I think Korea is important for the US in the same way in which US is important to Korea. I think that hopefully with goodwill on both sides, whoever is going to be in power in Korea, I don't think that's as key who's going to be the president. I think that regardless of who has been in power, one of the key bedrocks of the US-South Korean relationship has been friendship and alliance. And I'm constructive that it can continue. It'll be bumpy. It's going to say things that may sound a little bit outrageous. As they say about Trump, don't take him literally, take him seriously. You don't have to take everything he says literally. So that will be the advice I will give to the Korean policymakers.
What do you believe is the most significant economic risk facing the world this year?
The most significant economic risk, as I said, is that some of the policies of Trump, if implemented in a radical way, specifically tariff protectionism, the risk of trade and economic wars, two, draconian restriction to migration and mass deportation, three, the risk that you get lots of tax cuts and new tax cuts, and you don't find ways to pay for it. All these things, one, will be inflationary. Two, they will increase interest rates. Three, they would therefore hurt global economic growth. By the way, tariffs, in the case of the US, they increase inflation and they weaken growth. But tariffs, their impact on Korea or China and Europe, since it's like a negative demand shock, you cannot export some of your goods to the US. It's like a negative demand shock that reduces your growth, but reduces also your inflation, because you have excess supply of goods that you cannot sell to the US. So the impact on the rest of the world is different than US. In both cases, you get lower growth. In the US, you get higher inflation, while in the rest of the world, you get lower inflation. So there are also these differential impacts that one has to consider and think about.
And as you mentioned, Korea doesn't have to take everything about tariff, Trump said, right?
Some of the things they're going to say are sounding extreme. The reaction should not be, if you impose tariff, I'll impose tariff. Say, we're friends, we're allies, we have lots of things we share, and goals that are not just economic, but also political, geopolitical. Let's sit down, let's have a constructive negotiation, and let's reach an agreement. And in the past, those things have happened when Democrats were in power. That happened even when Republicans were in power. They happened even during the first Trump administration. So, like friends and allies can disagree, but when they sit down, the commonality of their interest and their goal is more important than the differences, and you can constructively reach agreement. Of course, you'll have to make some concessions, but I think it's worth making those concessions and maintaining a U.S. That is your friend, that is your defense ally, and that maintains relatively open markets with you. It's your net benefit compared to the alternative.
I really appreciate your time. Thank you so much.
Pleasure speaking with you. Always a pleasure also visiting your country. Hopefully soon again.
Thank you. Bye-bye.